Welcome back. It is Monday afternoon. Market's closed for about an hour. May 4th already. I just wanted to give everybody a quick rundown on how to find the blog posts every morning in case you're just catching the video at the end of the day. So you go to tradingeducationblogs.com and you can find it in one of two ways. You can scroll down on the home page and find the trading game plans for the day, or if it happens to be pushed off the home page because there's a certain amount of pictures there, you can scroll down and find the same one. It'll always have the date and trading game plans at the top. So you can see we're actually starting to get into today. So it's got Monday, subscriber ideas, which we covered in the pre-market meeting, and we're going to cover the stocks that actually followed through from today, and you will see this video that we're shooting right now in this spot. So if you're new to the website, that's where you go, tradingeducationblogs.com, and then you can just look up the Trading Game Plans blog post, which is new every single day. All right, so coming into the day, we had a very big expectation of getting some follow through. On the left is the 2-day intraday chart. On the right is the daily chart. We have the 20 and the 50 period moving averages. The 20 is exponential. So zooming out here, we always start with the spiders. It's very, very clear to see, as we discussed this morning, 212 is the level. Every time we've gotten up there since end of February, we just keep getting pushed back and haven't been able to get through there. Today we did get some follow through. We got a big gap up, but you can see here by 10 o'clock we actually petered out and could not get any kind of steam from a market perspective. So essentially what we keep saying over and over and over again is this is a stock picker's market. You're not getting the juice from the major indices. The best you could be looking for right now is similar stocks in the same industry doing the same thing if you want to size up and get a little more aggressive. Probably the biggest thing we've been discussing lately is determining trade expectation and how can you expect follow through to know when you should get aggressive. So again, aggressive is three different things. It's share size, it's how long you hold it, and how many multiple positions you have. And right now the market's not really calling for that. However, you can definitely be on top of your game and look for some trades. Now the reason that I pulled this line out here is one of the major things you want to pay attention to during the day is change from the open. So this is essentially the opening price in the spiders here, give or take a penny. All right. So essentially what you want to look for is if your longer term bias, in this case, is long, you should be a little bit more aggressive or expect better follow through as long as today's price is trading above today's opening price. So the last price is above the opening price. Now, a couple of things going on here. We immediately in the first half hour, 45 minutes, pushed into resistance. So there was really lower expectation for follow through until we took that out. Now, on the positive side, we stayed above the open the whole day, pretty much, other than these couple of little blips through there. But we made lower highs pretty much the entire day. So it was kind of I'm not going to say frustrating because you had a decent first half hour, especially if you were along the gap higher. But you did not sell off again. Even though we didn't follow through, we did not sell off. So technically we did finish up 60 cents in the SPY. So it was a positive day, and it was positive from the open. We just didn't get that second burst of pushing through that level. Look, I mean, really the bottom line is as earnings season starts to wind its way down, there's a lot of indecision around 212 in the spiders, and we need to see if we could push through there. So that being said, your trade expectation for the market should be muted until we get through 212 with either volume and a big green candle, or until we meekly get through there and then pause above that level where you can feel a little bit more comfortable holding something. On the stock specific side, stuff that we have been calling out, this is actually one that could not have possibly set up technically any better. And I'm just going to draw a trend line here for a couple of reasons. I'm very, very big on yesterday's high and low as reference points. Clearly, we have a nice downtrend in H&R Block. We had a solid push down. Friday was a good push higher, so we were looking for a sell short. Now, if you listen to what we do on a daily basis, I am constantly paying attention to how a stock traded the previous day, the previous 3 to 5 days, and how it closed, and that close will set up the next day. So a very strong stock on Friday in a longer-term week downtrend set up a short sale at the previous day's high as resistance, and this is the previous day's high, which in this case was Friday. You can see we had one 15-minute push through that high, a second attempt by 10 o'clock, immediately it petered out there, and we had a nice trend down for the entire day. Now, the size of the trend isn't as much what I'm wanting to get across to everybody is what I'm trying to get across is the actual strategy, the setup, and the technical parameters for what you're looking for in the trade. So we have weak stock, strong close on Friday, into what was a support level, which should be now resistance, on top of the previous day's high as a reference point. So we have one reference point, two reference points, and a downtrend looking for a sell short. And look at that beautiful continuation to the downside. And again, if we use the opening price action that we just discussed in the spiders, that's where it is. So you can see pretty much from 10:15 to the close, it was trading below the open. So you had a lot of reasons to hang on to that H&R B trade, H&R block. Next, we're looking at Taser. Taser was actually, if you look on the daily chart here, we had a gap up on Thursday, followed through on Friday. We were looking for follow through today. On the weekly chart, we don't have any resistance coming up, so we were looking for a pretty solid push. Here is the opening 15-minute candle. And let me actually draw that opening price in there again. Right there is the opening 15-minute candle. There's the previous day's high. We were expecting follow-through based on the gap and Friday's price action. So even if you waited conservatively to get above the opening price, let's call it 32.80ish in that area. 32.80 to 30. Even if you just traded that first window, you got $1 right out of the gate. Couple of consolidation candles here looking for it. And again, the dollar amount is not as significant as much as reading between the lines, setting up the trade based on price action, and then what you anticipate should happen during the day. And in this case, strong stock, strong close, not quite saturated yet. We're looking for follow through, and within the first half hour, we actually end up getting a nice trend to the upside. So again, it's the setup that's important, not so much the dollar amount, because the setup and the consistency in calling the trades out and being able to spot them and trade them with conviction when the market opens, that's ultimately where money is coming from for you. And next we had Yum. Yum actually came up in a couple of our scans today, mostly because of the double average volume on Friday. You can see here clearly it had a huge explosion in volume. It is earnings season, but really here's the thing. Beautiful flag leading into a huge push on solid volume. No resistance on the weekly chart. We were looking for follow through here again. And let's take a look at what we got right out of the gate. Here is the opening price and the previous day's high. 92 to 94 in the first 15 minutes. Okay, so let's say you don't get it. Let's say that moves way too fast for you. Well, what happens after that? Now you're sitting at your desk and you're still managing a stock. You're long only, pull back, missed the first momentum. Reference point is yesterday's high and today's low, basically the same number, give or take a couple of cents, right? So as it pulls back, you're saying, I'm looking for a spot to be long, I'm looking for a spot to be long. Indecision candle, inside candle, buy the inside candle, and basically $1 at a retest of the high. So good reference point to book a profit, excellent spot to manage risk, excellent decision to only be long. So Yum played through there. Despite what the market did, we had some pretty good individual stocks in the game plan this morning. Next one we have Bank of America, BK. Now interesting thing here is this was an inside day, strong stock consolidating for roughly about 8 days. So the inside day was a breakout play. And again, if you are prepared, breakout days mean that you are looking for follow through. And look what we got. A beautiful, beautiful trend day. Push higher, consolidation, and a push higher into the last 2 hours of the day. 42.80, 43.30, not a giant day. That's not the point. The point is the technical setup of the day and what you were expecting from the day, which was a trend day. Consolidation, stronger trend, expecting it to break out to the upside. Got to break out to the upside immediately above the previous day's high and continuation. Again, it's not the dollar amount. It's forecasting price action so you can trade with conviction. And you're forecasting it two different ways. You have a bias, and then you have the last day as an inside day, which translates into contractions, lead to an increase in volatility, and you got it. So you got to be on top of these. One more, we have Intuit. Beautiful flag. Having a hard time staying above this level on the daily chart, so we did need to pay attention to that. All right, so let's call it 101.50 in that area, right? So having a hard time staying above there, but we had a pull down, beautiful flag after it took out the new highs. Now better would have been if it stayed above this level, but it didn't. But we ended up getting an inside day on Friday. So inside day on Friday means what? Bullish, intraday contraction, looking for a trend day. and that's what we get. So let's see what happens here and how this should have, could have, would have been traded. Right out of the gate, we get above the previous day's high, so maybe that's a little bit too fast price action for you. All right, so what are you looking for? You're looking for another consolidation or an intraday continuation pattern to get long, but the key is you're only looking long. That's the key. All right, get a little bit of consolidation in here. Maybe you bought the breakout of this 15-minute candle. If you did, you might have got stopped out on the pullback. Do what you're supposed to. Maybe you lose 20 cents. Big deal. Pulls back, inside candle, indecision, indecision. You buy one of these breakout candles, you hold above the previous day's high. Opening, you're above the open the entire day. So you pull back on this candle, hold the opening price, couple of candles of indecision. You could bid somewhere in here with today's low and the opening price both as support. Again, only looking long because of this. You don't go tactics first. You do strategy first. I only want to be long because of this reason. Inside candle, expecting a trend day. Pull back, hold support, key levels, and 180 cents to 101.70 in that area. So again, it's not so much the dollar amount or the amount that it's moved. What is important is reference points, a bias, and re-entering trades if you happen to get stopped out.